There has been so much talk in this country for the last however long, couple of months, about this idea of super profits or excess corporate profits or something, that somehow the big companies are making too much money and the government needs to step in and tax them really hard and stop them from doing it. It's an incredibly bad idea and it's a wrong-headed idea, and I've got to explain why it's wrong. First, let's take a look at this guy doing his thing. This guy, if you don't know him, was the former captain of the Australian rugby team, the Wallabies. That's right, he made a living putting his head in a scrum with the All Blacks for a living, and somehow now he thinks, given that he's a celebrity and he managed to get into Parliament because people gave him enough money that he could sort of market his way in there, and he's something of a celebrity, that he's going to tell us how economics and taxation works. I'm sure next week, Bindi Irwin will be telling us that planes don't really stay in the air because they're too heavy, and maybe after that, Kylie Minogue can tell us that, I don't know, penicillin doesn't really beat bacteria because it's just moldy cheese or something. But anyway, here he is.
The question I heard was that we know that a big part of inflation is off the back of corporate profits. You know, for the last year at least, the crossbench has been calling for a windfall profits tax. Mm-hmm. Gas companies made an extra $40 billion in the last year. The PRRT, the Petroleum Resource Rent Tax that Tammy talked about, the crossbench is saying, lift it.
So super windfall tax profits things and $40 billion and big numbers like that. But if we actually put our brains in, we can think this through and we can come up with reasons not to do this and understand the situation better than that. Firstly, so what? Someone went out there and made some money. Someone had an idea, someone had some capital, someone put a big effort in, someone had some ingenuity and went out there and they had a recipe at a restaurant and everyone came to the restaurant because the food was so good. Or they had active wear that everyone wanted to wear, so they made squillions of dollars doing that. Or they had some sort of piece of tech or science or research and development, or they cultivated their land so well that they made so much produce or wheat or sheep or something that they could sell at market and make a ton of money. And perhaps they kept what they had back until such time as the price was high enough, and then they dumped everything on the market at a really high price and they made some money. Let them keep it. It was theirs. It's their private property. Don't fuck with it. Let them keep that which they made. We should do it with workers. If workers work a 40-hour week, they should get paid for 40 hours a week. But if an entrepreneur steps into the bullpen and manages to make things work, then let them keep their money. But beyond that, it's not as simple as profits. A lot of people don't understand that the profit and loss doesn't equal a cash flow statement. I'd like to show you just exactly how that works. So the big company that always comes in for a ton of heat is Rio Tinto, and this is their financial statements for the year ended 31 December 2022 by the looks of things. So look, you've got profit here of after tax of 13. Now that's $13 billion in US dollars. So that's big. Let's not face it. I like to point out that actually they did pay tax. So people that say companies don't pay tax, wrong. $13 billion, that's a lot. That looks as though they've just got $13 billion. They're walking around with $13 billion in their pocket. But forget the P&L for a second and come to the cash flow statement. So from operating activities, that's buying and selling whatever it is that they buy and sell. It does appear that they've made $16 billion, which is even more. But then they've got things called investing activities. And so they've had to buy $6.7 billion worth of plant and equipment. And keep in mind for Rio Tinto, that's things like train lines and ports and ships and things like that. These guys really do own ships and rail lines and stuff. They had to acquire investments at some subsidiaries and things. And so they actually spent $6.7 billion of cash on things that was required to run the business. So now they've only got $9.4 billion. Now, if you ignore the dividends they paid out, they had to buy, looks like they had to buy out a non-controlling interest. That's an unusual one, but they spent $3 billion buying out minority equity interests. They repaid some loans and some leases. And so actually they spent, let's say $4 billion on financing activities. The reality is 9 minus 4, they really only made about $5 billion in profit in cash terms. It's not the $15 billion you think it is. It's actually much less once you take a look at the cash flow statement. And all these big companies are always building new ports and new trains and new boats and things like that. And that sort of stuff isn't cheap. The profit and loss can be misleading. But the really big issue is, who is it that actually makes the money? The Rio Tinto isn't walking into the cafe and buying a coffee. It's a company. It's not a real person. What we care about is people. We want people to have good standards of living and some sort of concept of equality, which is becoming more and more problematic with each day that goes on. How much money do people actually make out of this? And we can find that out by looking at the financials again. So let's scroll back to the P&L, the profit and loss statement. And you can see that there's really not much difference between these two numbers. So we'll just look at the top one. This company, if you own a share in it, you should make $766 per 66 cents per share you hold. So say $7.66 if you own a share. However, to buy a share in this company is quite expensive. So back at 30 June, it was about $100. At December, it's say $112. So this is a 31 December year end. So it's $7.66 divided by, let's say 100, just to make it easy maths. You make about a 7.6% return, although December would be less than that. It might be down to like 6.5% return. So really, that's not a huge return, all things considered. So think about what you can get on a term deposit or what you can get anywhere on some sort of investment in a rental property or something. Buying shares in Rio Tinto isn't actually that profitable. The real people, the real shareholders, it costs them $112 to get a share, and all they get is $7.6 back. And that's just like that's just the earnings per share. The actual dividend might not be 7.6. Rio Tinto probably does pay a dividend every year, but not every company does. And there's risk in these things. If the arse falls out of the coal prices or the commodities prices, then that share price can plummet. So no one's making super profits. The companies, yeah, I accept that they make a profit. I get it. But it's the people. At the end of the day, the people that have kids and want to try and feed them and send them to good schools, they can only expect like a 7.6% profit if they buy shares at $100. So no one's really making super profits like this. Finally, on the idea that there's no such thing as super profits, it's really difficult to explain, but this is a hell of a long game that Rio Tinto is playing. I haven't played the game, but I've seen the game played. I've listed companies. I've accounted for reverse takeovers. I've been a company secretary of a listed company. I've done a whole bunch of things, and I think I understand how the game works, but I probably don't understand all the nuances. But it's something like this. One, you get some high net worth individuals that take like $100,000, go out and acquire an area of land. You can never buy it. You only ever lease it off the government, and you are required to put a certain amount of spend into the land. You can't just lease it and hold it. The government will take the lease back off you if you don't spend like $50,000 a year exploring for resources. So you and your mates get however much money you got together, try and stay friends through the whole thing. Go out. I knew a guy that found or was looking for lithium out at friggin' Newdigate or Lake Grace or something like that in a salty lake. And I thought, you idiot. But that was like 15 years ago. And lithium's one of the most precious commodities right now. Australia is one of the biggest exporters of lithium. This guy was a legend, but it was 15 years ago that he was putting his family's money into exploring for some resource that was like meters and meters and hundreds of meters under the ground, and you couldn't see. You had to drill a hole down. Credit where credit's due. That's tough, but it's very speculative. Now, for every 100 companies that go and do that, one of them actually finds something. And then they got to go and try and get money from other people you don't know so well, who aren't your mates, and you try and get, say, $1 million. And then with that $1 million, you send one of those trucks out there that go like that, and the drill goes up and the drill goes down, and like that core, that sort of like piece of earth comes out. And you drill holes here, and every time you drill a hole, it's another $50,000 or something. So you can only afford to drill a certain amount of holes, and you find that there might be a resource in there. And if you find nothing, then you're stuffed, game over, you lost your money. But if you find something, then you go back to the market and you say, can I please have another $2 million? And at this point in time, you generally list the company. Now, it costs about $1 million to list. Lawyers' fees, ASX fees, accounting fees, geology fees. You put a prospectus out there. If you don't want to do that, you can backdoor list, or you can do a reverse takeover. Not as expensive, but more risky. And you somehow get a listed company. So now you've listed, you've got a whole bunch of people's money. You send the truck out there, you drill a whole bunch more holes, and you try and take I think it's like an implied resource into like an inferred reserve or something like that. And then once you've got that report, you get it past the Joint Operating Resource Committee, or JORC. And then once you've got that, now you've really got something. Now you can actually, but $10 million may have been spent by now and you haven't earned a dollar yet. And so then you either go and try and get a bankable feasibility study, which costs a lot of money to do, or you try and get a bigger company to buy you out and you become a subsidiary, not of Rio Tinto by any stretch of the imagination, but by some company that you've never heard of that probably trades at like 80 cents on the share market or something. And then they plow like $50 million into digging heaps and heaps and heaps and heaps of more holes and find out in that area where the reserve is and try and narrow it down and say it's in the northeast quadrant at exactly 1 kilometer below the ground. And then depending on how deep down it is and how dense and how pure it is, maybe you'll dig out a big pit to get to it, or maybe you've just done your money. Now, like maybe 1 in 1,000 companies that's come this far has got this far. The other 999, and they've all spent tens of millions of dollars, have all fallen over and aren't there. But this one company that finds out that the ore is close enough to the surface, is pure enough, and the commodity price for that particular commodity is high enough that it's worth digging it out, then you've got to acquire a mill, get access to a refinery somehow. You've got to get big trucks to move the stuff. You've got to hire a workforce. That's workers' compensation. That's a whole bunch of HR legislation you have to come through. You have to mill the thing, then transport it to the refinery, then smelt the thing, then add all the chemicals and whatever it is that the metallurgists do to actually get a product. Now, no one can afford to do all that. So then that resource gets sold on up, and eventually it makes its way to Rio Tinto. Now, don't forget, Rio Tinto has to buy a port, or has to get access to a port. It has to pour money into a town. Roburn's basically owned by Woodside, as far as I can tell. You've got to build roads. Literally, you've got to build roads. You've got to build rails. You've got to own ships. You've got to own trains. You've got to own trucks. I mean, this is a lot of money. And what you've got to remember is that this money doesn't sit in the P&L as an expense. It sits up on the balance sheet as an asset. So it doesn't decrease profit. It might if it's depreciated, but it can be depreciated over a long period of time. This stuff gets capitalized, and especially the investment in subsidiaries never gets depreciated. It just sits in the balance sheet forever and ever and ever, and never really forms an expense unless it gets impaired in one foul swoop. And then you just have one really bad year, and the politicians don't go on about that bad year. They don't count that as super profits. They just go on it when you have a good year or when you have a normal year. But so much of this expenditure, firstly, never happens in Rio Tinto. It happens in the little subsidiaries and the junior explorers and things. It happens for the 10 or 15 years before Rio Tinto ever comes along to it. So it never forms part of Rio Tinto's expenses. And then most of what Rio Tinto spends to get it sits in the balance sheet as an asset and not an expense. Look, I'm sure I've lost heaps of you already because that's some pretty tough accounting. And I haven't even gone anywhere near share-based payments or business combinations or consolidations or foreign exchange rates. Those are all complicated situations, but they all play a factor in this too. It is not the case that super profits exist like that. But the guy that used to play rugby for some sports team and probably still smells of Dankarum wants to tell us all that we need a new tax. I don't think so. I'm not just saying that super profits don't exist. I'm saying that it's a bad idea to try and regulate them. I think it's a bad idea for the following reasons. Number one, I'm an accountant. I can create any sort of creative P&L that you want. You want $1 billion profit? I'll give you one. You want $1 billion loss? I'll give you one. There's plenty that can be done. Here, I'll show you how. Look, I don't do this. This is illegal, but I'll show you how people could do it. So I bet you're all thinking that I'm going to go to the profit and loss and start fudging and moving numbers around in the profit and the loss. But creative accounting isn't about the profit and loss. It's about the balance sheet. So here we have the current assets, cash, receivables, inventories, and non-current assets, plant and equipment, investments, deferred tax assets, and all this sort of stuff. The liabilities are down here. There's not too much you can do with the liabilities. With provisions, you can, maybe those deferred leases. But this number here, cash and cash equivalents, this is probably the only really hard number in there. Although if it's a term deposit, you can get cash out of there and into what I assume this is other financial assets. Those are probably term deposits. There's an amount of fudging that can go on between these two. Tax recoverable, probably not much you can do there. Receivables, definitely. You can make that much smaller if you want, and you can create a loss out of nowhere. And if we're going to say to companies, if you make a profit, we'll tax you, then companies are incentivized to make a loss. And definitely that one there will come in for some scrutiny in a year that they need it to. Inventories, definitely. I mean, this is inventories carried at cost. I think inventory is like ore. So what does it cost to get ore out of the ground? Is it some of the depreciation of the truck? Is it the cost of moving the earth? Is it the cost of rehabilitating the mine afterwards? Is it the cost to build a rail out to port, or do you capitalize that sort of stuff? There's a lot that can go on in this line here to make this number bigger if need be. And if this number gets bigger, then when it comes time to expense it, then the expense gets bigger and you can decrease the profit you're showing. The really big one here is property, plant, and equipment there. 66% of the assets that this company has is sitting there. Hey, just depreciate this quicker. Increase the depreciation rate of property, plant, and equipment, and you will start getting losses. Intangible assets, just impair them or amortize them. Goodwill, write that off. Investment in equity accounted unit. Look, that's a tough one. I haven't even got a note for that. But that's a tough one right there. I mean, that's the sort of stuff that accountants balk at doing because You've got to go out to a totally different entity and try and audit it and try and come up with a profit figure for it and then take up a percentage of it. And there's a difference between a joint arrangement and a joint operation, which is way too complicated to get into. Anyway, I think I've made my point. As soon as we start incentivizing companies to show a loss so that they don't pay so much tax, so that we don't have the rugby guy jump up and down about super profits, the more you put pressure on accountants and business people in the world to start fudging accounts, the more fraud starts happening. Just don't incentivize it. Just let people declare whatever profit they had, whatever balance sheet they had in a true and fair way, and give them a reasonable rate of tax. If you do this, you'll grow the pie higher, as George W. Bush said, and we should be able to tax a big economy next year. All of this incentivizes corruption and creative accounting, and I think it's a bad idea. A lot of what people don't understand, and it's a very intangible concept, I accept. I'm not sure I entirely understand this myself, but that most of the value in the world is not cash in people's pockets. It's value on the balance sheet. So as we just saw with Rio Tinto has $6 billion in cash. It sounds good, but it's really got $96 billion worth of assets. But what are assets? I understand what cash is, but is a pile of old dirt that's allegedly all really worth anything if China stops buying it? Is a whole bunch of debtors. People say, I promise to pay you in 30 days. What if they don't pay? And the plant and equipment, what if these big yellow trucks that are driving around on dusty roads, what if they're not worth anything? What if no one wants to buy them off Rio Tinto when this is all done? What if the mining tax kills the mining industry in Australia and we've got all these big yellow trucks that no one wants anymore, mills and refineries that just aren't working anymore? So much of the value was on the balance sheet. And what value on the balance sheet really is some ability to forecast future profits and then discount them to present rates. You use a discounted cash flow methodology and you try and work out if a company is super profitable in the future, then it carries a lot of value, and it carries value in its share price as well. The number of shares on issue times by the price on the share market is basically the market cap. The price on the share market is determined by future profits. We start slugging these guys with new taxes. The share price plummets, the market cap plummets, you start impairing balance sheets. And I stop saying there's $96 billion worth of assets on Rio Tinto's balance sheet and start giving you a smaller number. And that means there's less value in the country. And that brings me to my next point, corruption. If you can change the value of the share market by saying stupid things on TV about taxes which affect future profits, which affect share prices, you can make money off this. Who's putting David Pocock in Parliament to make him say these things? Like, do these people, if they know he's going to make an announcement of a new tax on Tuesday, are they selling the shares on Monday and buying them on Wednesday? Because doing that, like announcing a new tax on a Rio Tinto, would certainly slash its share price. That's a reason that you know that it's bottomed out. You buy. David Pocock says, sorry, I made a mistake. I'm not accusing you of corruption here, but this is hypothetically how it would work. Sorry, I made a mistake. I'm not going to put a tax. The share price goes back to where it was. You just made money. This is how maybe this is how the top end of town works. This is beyond me. I don't know anything. I've never seen this happen, but theoretically it's true. This is how things could play out. Let's just not have stupid taxes announced all the time. Let's not talk about super profits. They don't really exist. And it offers a foot in the door to corruption, to start thinking about like just corrupt politicians, mere mortals, making an announcement that changed the entire economic landscape. Trust me, the top end of town's smarter than some former athlete. They're the ones that are going to profit from this. And it just crushes us, the little people. And the last point I want to make is, who are the shareholders of Rio Tinto anyway? Like, who do you really think they are? If Rio Tinto makes $10 billion tomorrow, I mean, it's not as though Rio Tinto goes out and buys itself $10 billion worth of Fabergé eggs. It's not as though it has Kanye and Beyonce come and perform for it as birthday. Rio Tinto doesn't really exist. It's the people that own it. Who do you think owns Rio Tinto? We do. We are the shareholders of Rio Tinto. All of our superannuation, all of our retirement fund, a lot of that money that's with your financial planner, money that's invested in banks, a lot of that money is what makes up the shareholders of Rio Tinto. And so when they make less money, we make less money. When Rio Tinto makes killer profits, we make killer dividends. That means our share price, our superannuation goes up. That means we can retire super. That means we can buy more in retirement. We want Rio Tinto to make super profits, which don't really exist, because we are the ultimate beneficiaries of this. And if you really want to like triple think, and this is like Inception now, but the bigger Rio Tinto gets, then the more employees that we have in Australia paying tax, the more trains being made and the more rails being purchased and the more ports being created. That's jobs for Australians too. It does trickle down. It trickles down if you're in the economy. And if you're a working person in the economy, Rio Tinto making huge profits is good for everyone. That's probably as much economics and accounting as everyone can tolerate for a day. It's certainly as much as I can, and I've still got to work the rest of the day. No super profits. They don't exist, and don't try and meddle with them. We're not going to be the ones that win. We're going to be the ones that lose. People that always win are going to win every battle, and the politicians aren't smart enough to win this. If you don't believe me, look at Julie Gillard's mineral resource rent tax. What a disaster. But that's enough. That might be a video for another time. Hit like and subscribe if you like, and if you don't. I hope you enjoyed this. Bye.